Based on the historical data and forecast, Bitcoin has shown a fluctuating trend with periods of consolidation. The RSI indicates that the asset is currently in a slightly oversold to neutral territory, with values ranging from 40.5 to 63.6. The Bollinger Bands suggest that the price has been oscillating within a defined range, with the recent price nearing the lower band. Considering the forecast for the next week, the price is expected to increase, potentially testing the upper boundary of the Bollinger Bands. Therefore, I recommend a long position strategy with a focus on capitalizing on the anticipated upward momentum. My proposed strategy involves entering a long position at $116,400. Given the current RSI and the potential for a bounce from the lower Bollinger Band, a stop loss should be set at $112,600 to mitigate potential losses if the price continues to decline. The initial target price is set at $118,300, aligning with the forecast price and the upper Bollinger Band. If the price reaches this target, we can consider a trailing stop loss to protect profits. If the price continues to rise, a secondary target price of $118,700 can be set, capitalizing on the upward trend. This strategy combines RSI and Bollinger Bands to identify potential entry and exit points, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Ethereum shows a strong upward trend. The RSI consistently remained above 50, peaking above 80, indicating overbought conditions, but failing to reverse the trend. The Bollinger Bands also suggest a widening range, indicating increasing volatility and potential for further price movement. Given the forecast prices consistently above the recent highs, I recommend a long position strategy. We will use a combination of RSI and Bollinger Bands to refine our entry and exit points. Specifically, I suggest entering a long position at $3,840. The RSI is currently in overbought territory, but the upward trend suggests a potential pullback followed by a continuation of the rise. Place a stop-loss order at $3,710, just below the recent support level and the bottom of the Bollinger Bands. For the target price, we can aim for $4,150, aligning with the forecast prices and the upper Bollinger Band. This strategy combines the momentum of the upward trend with the volatility indicated by the Bollinger Bands and the overbought signal from the RSI to maximize potential returns while managing risk. Based on the historical data and forecast, XRP shows a clear upward trend, especially with the forecast prices consistently above $3.19. The RSI has fluctuated but recently been trending upward, indicating strengthening momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. Combining these factors, I propose a strategy focusing on capitalizing on upward momentum while managing risk. We will use a combination of RSI and Bollinger Band strategy. My recommended strategy involves a long position with an entry price of $3.19 on August 9, 2025. The stop loss will be set at $2.79, just below the established support level, to protect against unexpected downturns. The initial target price is $3.43, aligning with the forecast price and the upper Bollinger Band. If the price reaches $3.43, we will move the stop loss to the entry price of $3.19 to secure profits and further capitalize on the upward trend. If the price continues to rise, a secondary target price of $3.46 will be set. This approach balances potential high returns with robust risk management, leveraging both technical indicators and support/resistance levels. Based on the historical data and forecast, BNB exhibits a generally upward trend, although with periods of consolidation. The RSI consistently reached overbought levels above 80, indicating potential pullback opportunities. The Bollinger Bands show that the price has been fluctuating within the bands, with recent prices nearing the upper band. Considering these factors, my strategy focuses on capitalizing on short-term pullbacks while maintaining an overall bullish outlook. I recommend entering a long position at $778, with a stop loss set at $751, right at the support level. The initial target price should be $798, aligning with the forecast for August 15, 2025. To refine this strategy, I'll incorporate RSI and Bollinger Band signals. When the RSI dips below 50 and the price touches the lower Bollinger Band, it signals a potential buying opportunity. If the RSI reaches 80 and the price approaches the upper Bollinger Band, it suggests a possible short-term profit-taking opportunity. Therefore, if the price reaches $794, I suggest taking partial profits and moving the stop-loss to the entry price of $778 to secure gains. The final target price is $799, based on the forecast for August 15, 2025. This blended approach combines trend analysis, RSI signals, and Bollinger Bands to maximize potential returns while mitigating risks. Based on the historical data and forecast, Solana has been experiencing a downtrend recently, with prices fluctuating between the support of $173 and the resistance of $182. The RSI consistently remained below 80, indicating a lack of overbought conditions, but dipped below 40, suggesting oversold territory on several days. The Bollinger Bands show that the price has been trading near the lower band, reinforcing the downtrend perspective. Considering this, a contrarian strategy focusing on potential rebound seems viable. I recommend initiating a long position at $162, anticipating a bounce from the support level. A stop-loss should be placed at $158 to mitigate potential losses if the downtrend continues. The initial target price should be $169, aligning with the forecast price for August 9, 2025. To refine this strategy, we can incorporate RSI signals. When the RSI drops below 20, it signals a strong oversold condition, presenting a high probability buying opportunity. Conversely, an RSI above 80 suggests an overbought condition, warranting a potential short position. Considering the current downtrend, I would adjust the strategy to prioritize long positions only when the RSI is below 40. If the price reaches $169 and the RSI is below 50, consider moving the target price to $174. However, if the price fails to reach $169 and the RSI remains above 50, consider exiting the position at $163 to minimize losses. This blended approach, combining support/resistance levels, Bollinger Bands, and RSI signals, should maximize returns while managing risk effectively. Based on the historical data and forecast, Dogecoin has been exhibiting a downtrend, with recent price fluctuations. The RSI consistently hovers around the mid-range, indicating neither strong buying nor selling pressure. The Bollinger Bands show that the price has been oscillating within a range, with the lower band providing support around 0.178 and the upper band acting as resistance around 0.276. Considering the support price of 0.201 and the forecast indicating a potential slight upward movement, I recommend a cautious long position. The entry price should be $0.214, with a stop-loss set at $0.201 to protect against a potential breakdown. The initial target price should be $0.228, aligning with the forecast and the upper Bollinger Band. To maximize returns and manage risk, I propose a dynamic strategy combining RSI and Bollinger Bands. If the price reaches the target of $0.228, we will take partial profits and move the stop-loss to the entry price of $0.214. If the RSI falls below 30, indicating an oversold condition, we will consider entering a long position at $0.178, with a stop-loss at $0.155 and a target price of $0.228. This approach allows us to capitalize on potential upward movements while mitigating losses during downturns, ultimately aiming for high returns in the Dogecoin market. Based on the historical data and forecast, TRON demonstrates a slight upward trend, consistently testing the resistance level of $0.338. The RSI fluctuates between 59.0 and 76.1, indicating periods of both overbought and oversold conditions, but generally trending towards the upper range, suggesting bullish momentum. The Bollinger Bands show that the price is nearing the upper band, indicating a potential for a pullback or a continuation of the upward trend if it breaks above $0.343. Considering these factors, I recommend a long position with an entry price of $0.338. A stop-loss should be placed just below the support level at $0.327 to mitigate potential losses, and a target price of $0.343, aligning with the forecast and the upper Bollinger Band, should be set to capture potential gains. To refine this strategy, we'll incorporate RSI signals. When the RSI drops below 20, oversold, it signals a buying opportunity. Conversely, when the RSI exceeds 80, overbought, it suggests a potential selling point. However, given the current upward trend and the RSI hovering around 68.6, a long position is favored. The portfolio will prioritize the long position with the entry price of $0.338, a stop loss at $0.327, and a target price of $0.343. This strategy balances the potential for gains with risk mitigation, capitalizing on the current bullish momentum while protecting against sudden downturns. Based on the historical data and forecast, Stellar shows a potential for upward movement. The price has been fluctuating within a range, bounded by a support of $0.289 and a resistance of $0.501. The RSI values have generally been within the 43.2 to 62.8 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands suggest periods of volatility, with the price occasionally touching the upper band, indicating potential buying opportunities. The forecast for the next week predicts a continued upward trend, with prices reaching $0.489. Given these factors, I propose a strategy that combines RSI and Bollinger Band signals to maximize potential returns. My recommended strategy involves a long position with an entry price of $0.447 on August 9, 2025. The RSI is currently below 80, so we are not in an overbought condition. The stop loss should be set at $0.383, just below the recent low and slightly below the lower Bollinger Band to protect against unexpected downturns. The initial target price is $0.489, aligning with the forecast price for August 15, 2025. If the price reaches this target, we can reevaluate the situation and potentially set a new target price closer to the resistance level of $0.501. This strategy aims to capitalize on the anticipated upward trend while mitigating risk with a carefully placed stop loss. Based on the historical data and forecast, Chainlink shows a clear upward trend. The price has been fluctuating within a range between $15.7 and $19.9, with the support price consistently holding at $17.9. The RSI indicates periods of both overbought and oversold conditions, with recent values trending upwards. The Bollinger Bands have been widening, suggesting increased volatility. Considering these factors, I propose a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. We will enter a long position when the price touches the support level of $17.9, confirmed by an RSI reading below 40. The stop loss will be set just below the support at $17.7 to mitigate potential downside risk. Our initial target price is the resistance level of $19.9, with a secondary target at $20.1 based on the forecast for August 15, 2025. To refine this strategy, we'll incorporate Bollinger Band signals. If the price touches the support level of $17.9 and the lower band is also near this level, it strengthens our entry signal. Conversely, if the price approaches the resistance of $19.9 and the upper band is also near this level, it suggests a potential pullback. In this case, we will adjust the target price to $19.7. The portfolio will prioritize the long position based on the support and resistance levels and RSI, while using the Bollinger Bands to fine-tune entry and exit points. This approach aims to capitalize on the upward trend while managing risk effectively, aiming for high returns with clearly defined entry, stop loss, and target prices. Based on the historical data and forecast, Sui has shown a generally upward trend with periods of consolidation. The RSI has fluctuated between 42.3 and 69.3, indicating both oversold and overbought conditions. The Bollinger Bands have widened and narrowed, suggesting increased and decreased volatility. The forecast for the next week indicates a continuation of this upward trend, with prices expected to range between $3.75 and $3.93. Considering these factors, I recommend a long position strategy focusing on capitalizing on short-term upward movements while managing risk effectively. The strategy will involve entering a long position at $3.75, coinciding with the initial forecast price and near the support level of $3.72. A stop-loss order will be placed at $3.65, just below the lower Bollinger Band and providing a buffer against short-term dips. The initial target price will be set at $3.93, aligning with the highest forecast price for the week. If the price reaches this target, we will consider moving the stop-loss to the entry price of $3.75 to secure profits and protect against potential reversals. This strategy combines RSI, Bollinger Bands, and forecast data to maximize potential returns while minimizing risk. Based on the historical data and forecast, Ether.fi has shown considerable volatility with support at $1.12 and resistance at $1.35. The RSI has fluctuated between 37.1 and 57.8, indicating periods of oversold and overbought conditions. The Bollinger Bands have also widened, suggesting increased price swings. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands for optimal returns. We will focus on the forecast data from August 9, 2025, to August 15, 2025, where the price is forecasted to be around $1.11. My strategy involves a long position entry at $1.06 on August 9, 2025. A stop-loss will be placed at the support level of $1.12 to mitigate potential losses. The initial target price is set at the resistance level of $1.35, representing a significant upside potential. However, given the RSI readings are consistently below 60, we can consider an additional target price at $1.11 for a quick profit. This combined approach aims to capitalize on the anticipated upward trend while managing risk effectively. The portfolio will be 60% long position and 40% cash. Based on the historical data and forecast, ApeCoin has shown a downtrend from July 26, 2025, to August 8, 2025, with recent price fluctuations. The RSI indicates that the asset is currently in an oversold territory, with values consistently below 40. The forecast data suggests a slight upward movement in the coming week, but still within a range that respects the support price of $0.556. Considering the Bollinger Bands, the price has been approaching the lower band, indicating potential for a rebound. Therefore, I recommend a long position with an entry price of $0.584. The stop-loss should be set at $0.556, coinciding with the support level to limit potential losses. The target price for this trade is $0.62, aligning with the forecast high for the week and offering a reasonable profit margin. The strategy combines the oversold RSI signal with the Bollinger Band's potential for a bounce and the slightly positive forecast. This is a moderately conservative strategy, prioritizing risk management with a stop-loss at the support level. The expected profit is $0.62 to $0.584 equals $0.036 per ApeCoin. This strategy aims to capitalize on a short-term rebound while mitigating downside risk. Based on the historical data and forecast, dYdX shows a mixed trend with periods of decline and recovery. The RSI consistently fluctuates, indicating indecision. The recent RSI values have been above 50, suggesting a slightly bullish momentum, but approaching 80, which indicates an overbought condition. The Bollinger Bands have been widening, indicating increasing volatility. The price is currently near the support level of $0.618, and the forecast suggests a gradual increase towards $0.66. Therefore, I recommend a moderately bullish strategy with a focus on short-term gains. I suggest a strategy combining RSI and Bollinger Bands. We will enter a long position when the RSI falls below 40 and the price touches the lower band of Bollinger Bands. The entry price will be $0.535. The stop-loss will be set just below the support level at $0.52. The first target price will be the resistance level at $0.648, and the second target will be the forecast price of $0.66. If the RSI rises above 80, we will exit the position to avoid overbought risks. This strategy aims to capitalize on short-term price fluctuations while managing risk with a well-defined stop-loss and target levels. Based on the historical data and forecast, Arweave has shown volatility, with a recent downward trend followed by a slight recovery. The RSI indicates that the asset has been in oversold territory, suggesting a potential bounce. The Bollinger Bands show the price fluctuating within a defined range, with the lower band recently tested. Considering these factors, I propose a moderately bullish strategy. We will initiate a long position at $7.02, coinciding with the first forecast price and the recent support level. A stop loss will be placed at $6.94, just below the recent low, to mitigate potential losses if the downward trend resumes. The initial target price will be $7.41, aligning with the forecast price and the middle of the Bollinger Bands. To refine this strategy, we will incorporate a dynamic target price based on the RSI and Bollinger Bands. If the RSI reaches $60, indicating a move towards overbought territory, we will adjust the target price to $7.48, the upper end of the forecast range and near the upper Bollinger Band. If the price hits $7.48, we will consider taking partial profits and moving the stop loss to the entry price of $7.02 to secure gains. This approach combines the insights from multiple indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Aptos shows a downtrend with periods of consolidation. The RSI consistently dips below 50, indicating prevailing selling pressure. The forecast for the next week suggests a sideways movement, hovering around $4.4 to $4.56. Considering the support level at $4.63 and the oversold RSI levels, I recommend a contrarian strategy focused on short-term gains. I will initiate a buy position when the RSI falls below 35, signaling an oversold condition. Specifically, when the RSI reaches 34.4 on August 2, 2025, I will buy Aptos at $4.24. The stop loss will be set just below the support level at $4.58 to protect against a potential breakdown. The target price will be the resistance level of $5.1, aiming for a profit of $0.86. To further refine the strategy, I will incorporate the Bollinger Bands. When the price touches the lower band, it indicates a potential oversold condition, reinforcing the RSI signal. I will maintain this buy position until the price reaches the upper Bollinger Band or the RSI reaches 80. If the price reaches $4.56 on August 15, 2025, I will sell the position. This combined strategy leverages both momentum and volatility indicators to maximize profit potential while minimizing risk. The portfolio will consist of 60% of the RSI strategy and 40% of the Bollinger Band strategy to optimize the overall return. Based on the historical data and forecast, Optimism shows a fluctuating trend with a recent bounce from the support price of $0.656. The RSI indicates periods of oversold conditions, particularly around August 1 and August 4, with readings below 50, suggesting potential buying opportunities. The Bollinger Bands show that the price has been oscillating within a defined range, with the lower band frequently tested. The forecast for the next week anticipates a generally upward trend, with prices hovering around $0.704 to $0.753. Considering these factors, I recommend a combined strategy focusing on RSI and Bollinger Bands. My strategy involves a tiered approach. Firstly, initiate a long position at $0.661 when the RSI dips below 50, setting a stop loss at $0.632 to protect against a potential breakdown. The initial target price is $0.716, aligning with the recent resistance and the center of the Bollinger Bands. If the price reaches $0.716, consider a partial profit taking and a trailing stop loss at $0.703. Subsequently, if the price continues to rise and touches the upper Bollinger Band, around $0.753, take full profit. This combined strategy leverages the RSI's oversold signals and the Bollinger Band's range confirmation for optimized returns. Based on the historical data and forecast, Pepe demonstrates a generally downward trend with recent consolidation. The RSI consistently fluctuates, dipping below 40, indicating oversold conditions several times. The Bollinger Bands show the price has been oscillating within a narrowing range, suggesting decreasing volatility. The support price remains stable at $0.0000104, while the resistance price is $0.0000124. The forecast for the next week indicates a slight upward movement, stabilizing around $0.0000114 to $0.0000116. Considering these factors, I recommend a cautious long position strategy. We will enter a long position when the RSI falls below 35, indicating an oversold condition. The entry price will be $0.0000104. The stop loss will be set just below the support level at $0.0000980 to protect against further downside risk. The target price will be the resistance level of $0.0000124, aiming for a substantial profit. To refine the strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band while the RSI is below 35, it strengthens the buy signal. If the price breaks above the middle band, it signals a potential upward trend. The portfolio will prioritize the RSI strategy as the primary signal, using the Bollinger Bands for confirmation. Therefore, the final strategy is to enter a long position at $0.0000104 when the RSI is below 35 and the price touches the lower Bollinger Band. Set a stop loss at $0.0000980 and a target price at $0.0000124. This approach balances risk and reward, capitalizing on potential rebounds while safeguarding against significant losses. Based on the historical data and forecast, Lido DAO shows a fluctuating trend with recent price consolidation. The RSI indicates that the asset is currently not in oversold or overbought territory, hovering around 50 to 60. The Bollinger Bands suggest recent price action has been contained within the bands, indicating moderate volatility. Considering the support at $0.91 and the resistance at $1.22, I recommend a long position strategy. We will enter a long position at $1.02, anticipating a potential upward movement based on the forecast. The stop loss will be set at $0.95 to limit potential losses if the price declines, and the initial target price will be $1.15, aiming to capture a significant portion of the upward potential. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI drops below 40, indicating an oversold condition, we'll consider adding to our position at $1.07, with a stop loss at $0.99 and a target price of $1.12. Conversely, if the price touches the lower Bollinger Band, we'll enter a long position at $0.99, with a stop loss at $0.93 and a target price of $1.08. This layered approach, combining the initial long position with RSI and Bollinger Band signals, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Chainlink shows a clear upward trend. The price has been fluctuating within a range between $15.7 and $19.9, with the support price consistently holding at $17.9. The RSI indicates periods of both overbought and oversold conditions, with recent values trending upwards. The Bollinger Bands have been widening, suggesting increased volatility. Considering these factors, I propose a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. We will enter a long position when the price touches the support level of $17.9, confirmed by an RSI reading below 40. The stop loss will be set just below the support at $17.7 to mitigate potential downside risk. Our initial target price is the resistance level of $19.9, with a secondary target at $20.1 based on the forecast for August 15, 2025. To refine this strategy, we'll incorporate Bollinger Band signals. If the price touches the support level of $17.9 and the lower band is also near this level, it strengthens our entry signal. Conversely, if the price approaches the resistance of $19.9 and the upper band is also near this level, it suggests a potential pullback. In this case, we will adjust the target price to $19.7. The portfolio will prioritize the long position based on the support and resistance levels and RSI, while using the Bollinger Bands to fine-tune entry and exit points. This approach aims to capitalize on the upward trend while managing risk effectively, aiming for high returns with clearly defined entry, stop loss, and target prices. Based on the historical data and forecast, Pendle shows a clear upward trend, particularly evident in the recent surge to $5.46. The RSI consistently moved above 50, indicating positive momentum, and the forecast suggests continued upward movement with prices reaching $5.82. Considering the support price of $4.87 and resistance of $5.85, we will implement a combined strategy focusing on breakouts above the resistance and pullbacks to the support level. The initial entry point will be at $4.74, coinciding with the first day of the forecast. A stop loss will be placed slightly below the support level at $4.60 to mitigate potential losses. The first target price will be set at $5.24, aligning with the forecast price and providing a reasonable profit margin. To maximize returns, we will use a layered approach. If the price reaches $5.24, we will move the stop loss to the entry price of $4.74, securing profits while allowing for further upside. Subsequently, we will target $5.82, the highest point in the forecast. However, if the price fails to reach $5.24 and instead pulls back towards the support level of $4.87, we will consider a second entry at $4.87, with a stop loss at $4.60 and a target price of $5.24. This layered strategy allows us to capitalize on both upward momentum and potential pullbacks, optimizing our returns while managing risk effectively.